Today we'll take up the topic of activity ratios from accounting ratios. The first activity ratio that we'll be doing today is the stock turnover ratio. The stock turnover ratio is also called the inventory turnover ratio. The formula for calculating the stock turnover ratio is this. Stock turnover ratio is equal to cost of goods sold upon average stock of the inventory. Average stock or inventory, right? Now, this stock turnover ratio, it is a ratio between the cost of goods sold during a given period of time and the average stock carried during that period, right? Now, what does this ratio tell us? Basically, this ratio, it shows whether the investment made in the stock has been efficiently utilized or not. So, whatever the company is investing in the stock, whether they are able to utilize that investment properly or not, is indicated by the stock turnover ratio, right? So, stock turnover ratio is always in terms of number of times. So, if the answer comes as 4, it is 4 times, 5 times, like that, okay. So, it will be in, supposing it is 5, so it is, we write it as 5 times, right, 6 times, something like this, right, okay. Now, a higher ratio will mean a better performance, and it indicates that indicates a higher sales for the firm, right. So, it indicates that more sales are being produced. The company is utilizing its investment in an efficient manner, right. Now, let us take up an example to illustrate this stock turnover ratio. I have this question here, example 1. Now, here we have the opening stock as 76,250, closing stock is 98,500, sales is 5,20,000, sales return is 20,000, purchases is given as 3,22,250. Now, you have to calculate the cost stock turnover ratio, right? Okay, now let us do it over here. First of all, I have to find out the cost of goods sold. Now, what is the formula for cost of goods sold? It is opening stock plus purchases plus direct expenses minus closing stock, right. So, in this question, opening stock is given as 76,250, purchases is 3,22,250, and there are no direct expenses given. So, we will subtract the closing stock, which is given as 98,500, right. So, 76,250 plus 3,22,250 plus, sorry, minus, so it is, I will repeat again, 76,250 plus 3,22,250 minus 98,500 comes to 3 lakh, right. So, the cost of goods sold will be equal to 3 lakh, okay. Now, we have to find out the average stock. Average stock is equal to the opening stock plus closing stock upon 2. This is the formula for calculating the average stock, right? So let's calculate the average stock here. Opening stock is 76,250, closing stock is given as 98,500, and this upon 2. Okay, so 76,250 plus 98,500 will be equal to this will be equal to 87,375. Okay, 76,250 plus 98,500 will be equal to 1,74,750. 1,74,750 upon 2 will be equal to 87,375. So this is the value of the average stock, right? So now we have to find out the stock turnover ratio. Now this will be, we have to apply the formula cost of goods sold upon average stock. Okay, so this will be equal to 3 lakh upon 87,375 and 3 lakh upon 87,375 will be 3.43. So the answer we will write as 3.43 times. So this is the stock turnover ratio. 3.43 times will be the answer. So the stock turnover ratio is equal to 3.43 times. The answer will be in number of times. Is that clear? Now let's take up one more example for stock turnover ratio, a different type of a question. Now look at this one. From the following information, determine the opening and closing stock. Here we are not supposed to find out the stock turnover ratio. We are supposed to find out the opening and closing stock. Now the stock turnover ratio is given as 5 times. Total sales is given as 2 lakhs. Rate of gross profit on sales is 25% and closing stock is more by rupees 4,000 than the opening stock. Okay, so let's do how to do this type of a question. First of all, we'll find out the gross profit. Now I'll go back to the question. It says rate of gross profit on sales is 25% and total sales is 2 lakh. That means the gross profit is 25% of 2 lakhs. Okay, so here I'll write gross profit is equal to sales into 25%, that is equal to 2 lakhs into 25 upon 100. Okay, so that will be 2 lakh into 25 by upon 20, 2 lakh into 25 upon 100 is 2 lakh into 1 by 4. 2 lakh into 1 by 4 will be 50,000, right? So now we have calculated the gross profit. The gross profit is equal to 50,000. Okay, now we find out the cost of goods sold. Now there are two formulas for calculating the cost of goods sold. One is where we add the opening stock plus purchases minus closing stock. The other one is this sales minus gross profit. Now we know the amount of sales and we have also calculated the gross profit. So this will be 2 lakh is the sales minus gross profit is 50,000. So the cost of goods sold is equal to 1,50,000. Okay. So gross profit we found out first. From the gross profit we found the cost of goods sold. Okay. Now I am going to apply the formula of stock turnover ratio is equal to cost of goods sold upon average stock. Right. Now in this question they have given the stock turnover ratio as 5 times. So let's apply that here. So this is 5 is equal to cost of goods sold was 1,50,000 upon average stock we do not know, we have to find out. So average stock. Okay. So this will be average stock will be equal to 1,50,000 upon 5. Clear? Right. So 1,50,000 upon 5 is 30,000. So average stock will be equal to 30,000. Clear? Now after this, now again see here, closing stock is more by rupees 4,000 than the opening stock. Now I come to this line, right? Now we have been given that the closing stock is more by 4,000 than the opening stock. So we will write, let the opening stock be X. So the closing stock will be X plus 4,000, right? So the average stock is equal to opening stock plus closing stock upon 2. Clear? So average stock we already calculated, that is 30,000. 30,000 is equal to X plus 4 upon 2. Okay. So this will be equal to 30,000 is equal to 2x plus 4 upon 2. Okay. So what will this be? This becomes 60,000 is equal to 2x plus 4. So here it will be it will be 4,000, not 4 here. This is here x plus 4,000. So this is 2x plus 4,000. So this is 2x plus 4,000, right? Okay. So 2x will be equal to 56,000. So x will be equal to 56,000 by 2, that is 28,000, and x is the opening stock. So opening stock is 28,000, closing stock is equal to x plus 4,000, so that is 28,000 plus 4,000, that is equal to 32,000. So now we have found out the opening stock is equal to 28,000 and closing stock is equal to 32,000. That is what we were supposed to find out in this question. So this is your answer, right? So this question will be done in this way. So with that we come to the end of the stock turnover ratio. We have seen two types of questions here. Hope you have understood this. Thank you.